Welcome to Talking Stocks. I'm Gugulethu, Cele. Also in studio with me are Anchor Capital guests Peter Amitiage and Liam Hechter. Now they are the experts, and together we bring you insightful analysis into both JSE and globally listed companies. Now they are arguably one of the most exciting companies on the JSE that just last week announced plans to grow its financial services offering. That's right, we're talking about Discovery, a very interesting company and one that has potentially a finger in almost every pie, a really diversified group. And maybe if you can unpack it for us, Peter, what makes up Discovery?
Sure. I mean, Discovery is one of the great success stories of entrepreneurship in South Africa over the course of the last 10, 15 years. The business, as you look at it today, has a number of legs to it. It started off as Discovery Health, as we know it, came into a very stagnant medical aid market and got up to well north of 30% market share in over a few years in a fairly stagnant market, with a model that nobody else could compete with. Then moved into life insurance, and Discovery Life is about 15 years old and still growing very, very nicely and getting some nice market share. Then they've also, above and beyond that, they've launched a number of new ventures like Discovery Invest, Discovery Insure. They're quite big now and they've made amazing strides with effectively a startup business in the United Kingdom called with Prudential, which they've recently bought out. And then that's kind of the core of what will drive profits. But there's also quite a bit of optionality in some other businesses. And I think what the market's getting very excited about in particular is Ping An. They own 25% of the leading health company. We'll talk a little bit about what that means in China. Now, the analysts are sitting doing extrapolations of X number of new people per day and what that means. And you can get to some really exciting and big numbers. That portion of it comes with quite a lot of risk in terms of an evaluation and valuation process. But if you can reach a fair value on what's already a fairly fast-growing core business, it adds a lot of extra luster to it. And a share that we're putting as a default into new portfolios.
Sure. Now, when you mentioned the word Discovery, one obviously thinks of vitality, which is clearly the common link between all the different aspects that you listed here. Liam, clearly this is what has worked to make Discovery a bit of a game changer in the industry?
Sure. I think Discovery has used vitality to create a competitive advantage for itself. So I think the business model generally works on, they're very good at creating disruptive technologies and using big data. And I think Vitality has done that very well to help them price insurance premium policies. So I think in terms of Discovery Vitality, it's an exciting business and it will continue to give them a competitive advantage.
What Vitality aims to do effectively is to change people's behavior. And they use that principle across everything that they do.
Incentives, huh?
Yeah, incentives. So if you're healthier and they're insuring your life, they're better off if you live longer. And they've applied that actuarial kind of based model, which they've made usable for the man in the street. And if you don't smoke, if you drive well, if you exercise, etc., you pay less, you're incentivized to do so. But obviously they wouldn't be incentivizing you if it wasn't better for them. So at the end of the day, they're saying their average life will last longer in their book than the big fat lazy smokers in the other insurers' books, I guess.
Exactly, costing them more money. But let's touch on some of the growth engines that you mentioned. You did touch on Ping An in a moment, but let's delve into the UK first. Following them buying out the remaining capital in, was it Pru Health or Prudential?
It was now rebranding and Pru Health.
Exactly, and rebranding that now into Vitality. So quite clearly they're very bullish on the UK market on that front.
They are. I think it made sense for them. So they had a big liability building up on the balance sheet. And what they did was they exercised their call option on the rest of the shares in the JV, and that ultimately released that liability. And you saw a big profit number coming in at the half, which was basically not a normalized number. It was the release of that liability. So we didn't really take it into account in terms of our evaluation of the company. But in terms of driving growth, I think now management can focus on that business as their own and change the business to the way they see fit. They will buy probably a life license in the UK, part of the reason why they did the rights issue at the half, and they'll use that life license to build up the business, the life insurance business in the UK.
Well, you mentioned about that rights issue, and we did recently speak to Discovery Chief Executive Adrian Gore about the 5 billion rand rights issue that the company was raising ahead of the announcement last week, and we also got further news following that. But let's take a quick look at our discussion with Adrian Gore.
I think in the UK, if you go through the history, there have been very few successful new life insurers. So what the team has done there is quite remarkable. The ability to grow it requires funding, and that's just clear. There's no way around that. Our sense is that the return on capital will be quite substantial, and I think the strategy is right. The other piece that at this stage doesn't have detail is that there's a specific opportunity here in South Africa we'd like to pursue. That's why, just given the results, we've given a range of the rights issue, and we'll actually be giving detail of that in a few weeks' time. To my mind, both are very, very exciting, and I think reflect the success of the Discovery model. So for us, it's been a very, very good period.
Well, following Adrian Gore's discussion with one of my colleagues there, then the big news came out that how the money from the rights issue is going to be split up. And he mentioned the UK operations, but more importantly, the increase in their stake in the Discovery card, Peter.
Yeah, I think so. The Discovery card is something they had a minority stake in, and they've bought the rest of it back at a pretty reasonable valuation, so it'll be accretive to earnings. And it just gives them full ownership of a tool that they'll do some more interesting things with. I think one of the things about Discovery is that they're always looking for inventive, disruptive ways to change the status quo. And I would expect, the Discovery card's done well. It hasn't been a major profit contributor because they've also had a fairly small stake in it. But I would expect, now that they have full ownership, to also expect further innovative things that they'll do to create value in that space.
So in a nutshell, you're excited about it?
Sure. It's not company changing, but incrementally very positive.
The Chinese opportunity, Ping An?
Yeah, it's a tricky one. So in our valuation of the company, we actually value it at zero because we think the outcome could be completely binary, meaning it could be a huge positive or it could go to zero. And I think that's the way the management see it as well. What they've done there is effectively they're starting to create a health insurance market in a huge emerging market economy where there is currently no health insurance market. So I think for a company like Discovery to go in, and they've partnered with a huge insurer in China, being Ping An, and Ping An is basically like an Old Mutual in South Africa, and they've got a huge distribution force of about 600,000 insurance brokers. So they can use that distribution force to sort of sell what is it effectively in South Africa you would call a gap cover, and that's what they're selling to an uninsured Chinese economy.
You also mentioned in your slide that you don't estimate that this might break even in the next 5 years. So it seems as though the profitability prospects aren't that positive.
So they gave a guidance as to what they expect their operating profits to be by 2018 as $1 billion.
That's in the business as a whole.
That's in the whole business. So we haven't really accounted for any sort of contribution from Ping An in that number. So in China, if the business is growing and it reaches profitability too quickly, they'll say that you're not managing it properly because they believe in what people call explosive growth. So they'll want you to keep reinvesting in the business, and I think that's what will continue to happen there.
But I think the point is, so we're reaching and saying Discovery is fair value without that, but it's some optionality on top of it. But if the numbers, and the numbers are quite exciting, it's kind of 1,000 a day, the last numbers.
Sure.
If they can continue that, but we don't know. We don't have a huge level of confidence in that being sustained. But if that can be sustained and grow, and people see that, irrespective of what's flowing through in the income statement, the market will start to put a value on it. And if Liam's being rightfully cautious and conservative, and that's the way we like to be in our business and be cautious. But if you extrapolate it out and grow it, this thing can be bigger than the whole of Discovery itself. But putting a bet on that at the moment is not something we would do. But it's nice to have that optionality in a business.
Let's touch on the valuation of the share price, though. How does it fare, especially against its competitors, Liam?
I think because of the growth prospects, it's priced at a premium to its peers. On a forward 17, it's a big premium to a company like Old Mutual, which is possibly a forward 11. So I think the valuation is definitely rich, and it's not something that you want to have your whole portfolio in. You want to diversify into other insurers as well. But this is definitely, in the space, easily the most exciting company in our view.
Most exciting. Well, let's get your views then on this particular stock, and time now to ask our experts whether this is a buy, hold or sell. Peter, let's come to you. Buy, hold or sell Discovery?
Yeah, Discovery's been part of our core portfolio, kind of our core 10 shares, I think, since we started our business. So it's a company we really like. We would definitely still put money into it. I think it is racing away a little bit. It's run a little bit ahead of its valuation. So it's one we'd have a core position, and if the market came off and it gave another entry point, we'd go bigger on it. Back in October last year, when the market pulls back, our kind of mantra is that's when you increase the quality of your portfolio. And I think back then it was Discovery and Woolworths that we upped significantly. So it's a company you've got to own for the next 5 years. But you can play a bit around the valuation, but we'd definitely keep a core portion in it.
So clearly you're buying in the dips. Liam, you must agree then. Is it a buy?
I certainly do agree.
For the long term as well?
For the long term, I think right now it's one that you want to buy and just sort of tuck it into your portfolio, let it grow with its earnings.
Let's touch on the management of the firm. Adrian Gore, everybody probably thinks he's the rock star of innovation when it comes to the healthcare sector. So you still have your confidence firmly planted in him? Yeah,
I always say to people that in my time as an analyst, there's been 3 investment analyst meetings where I've actually placed an order for shares during the presentation. And that's the inspirational guys out there where you get the feeling you want to leave some money with this guy. And that was Stephen Sard from Aspen, Adrian Gore from Discovery, and Mark Lamberti when he was running Massmart.
Wow.
So Adrian Gore is clearly inspirational. He drives those around him. It's become a big business, so it's no longer reliant on one person. It probably never was, but had that impression. But I think he insists on innovation, drives growth, and I think it's a group of people who've looked to change the way things are done, and done that successfully, and there's no reason to believe that they can't continue doing that.
Next time the share price goes up after a presentation, I'll know who to call next. Well, that's where we do leave it for today. Thank you so much for your insights on Discovery. And that brings us to an end for today's show. But do catch us next time where we talk more stocks.